Kia ora and welcome to episode 56 of Bridge Talks Business with Milford. You've heard, no doubt, the reporting about this AI bubble. This week, we're separating fact from fiction. Andrew Curtayne is in the hot seat from Milford. First, here's your top 5 business bits. Number 1, overall, the US employment market looks to be in balance. Reports last week of layoffs going up, offset by the fact it appears that jobs are also being added to the economy. Markets are fueling up on less reliable data because, well, the proper ones haven't been available due to the government shutdown. Number 2, business surveys in the US showed improving economic conditions, strong services sector, but inflation's still a worry with pricing metrics ticking up a bit. Number 3, the tariff court case continues in the Supreme Court in the US. Aggressive questioning by some of the judges had investors reducing their expectations that tariffs would be ruled legal in the end. That said, if they are ruled illegal, Trump still has plenty of other levers to pull. Number 4, signs the shutdown might finally be coming to an end. For now, lawmakers have taken the first step towards reopening, but it's only a stopgap measure until January. Share markets rallied on the news. And number 5 this week, relatively quiet. Company earnings reports have largely concluded, and we're not due to get any US data, even if the government reopens. All right, it's business time. Let's speak to Senior Investment Analyst at Milford, Andrew Curtayne, about the AI situation. Just a reminder, this segment is informational only and should not be considered financial advice. Andrew, welcome back.
Thanks, Ryan. I'm glad to be here.
Good to see you. Now, the AI bubble situation, that's potentially a bubble situation. Let's just reverse a little second here. How did we get to this point? You know, the AI stocks have been leading the stock indices. What's been driving that demand for AI?
Well, it all comes back to when ChatGPT released what is known as the version 3 of its model. That came out sort of early 2023, late 2022. And it was sort of the defining moment where AI went from kind of like this machine learning thing that people kind of thought was sort of a bit futuristic, would come at some point, to all of a sudden, well, we're here. There's this chatbot which has got a lot of flexibility to answer questions about whatever we ask and actually provide pretty good answers. So that was kind of the start moment of what we might call the recent AI boom. And from then, it's been all about competition between all the companies that, well, what we call as LLM companies, which are large language model companies. So that's OpenAI that makes ChatGPT, that's Gemini, Llama by Meta, and all these companies competing to sort of improve the capability of their models. And it started what is essentially kind of like an arms race. It's a race between the biggest companies in the world to get AI leadership, so to have the best models, the best products that can go serve clients and serve customers like ourselves. And it's not even just an arms race with companies, it's an arms race between nations. Both China and the US want to win at AI. It could give them a competitive advantage both economically but even militarily if they sort of win in this AI race. So yeah, it's been a hugely fast-paced sort of 2.5 years since ChatGPT 3 came along, and and it still feels like there's a very long way to go, and it's going to be very unpredictable about exactly where this technology goes.
Andrew, has seen a bit of a pullback just in the last couple of weeks in some AI stocks. Is that something we need to be worried about?
I think every time the market has a little bit of pullback, you need to have a look and understand why. And so we have seen, the SP500 has come off about 2.5%, 3%. It's not a huge pullback by traditional standards, but we have seen the AI stocks come off more like 10 to 15%, which is probably the largest pullback we've seen for about 6 months. And I don't think we need to be too worried about it, but it is showing that things are very extended long. If I look at the performance in the AI spectrum, since the market bottomed back in 2023, AI semi-stocks are up about 330%. Now this compares to the overall market that's up about 75%. So it's been a huge rally. And so you put that in context, 10 or 15% pullback when they've rallied so much, and then there is not particularly worrying. I don't think there's anything fundamentally negative that's coming out on the AI spectrum. I think in fact, I think it's all been quite positive. So I think it's more of a sign that the market's a little bit exhausted, a little bit long. It gets a little bit hard for like continued positive news to push the market back. Also, you had a few other things going on in the market. You've had these government shutdowns in the US, which is starting to sort of make people a little bit more concerned. Although it looks like just recently, last night, we may get some resolution to that, and we actually saw markets bounce back a little bit this morning. Went up about 2%, and AI stocks led the rally back.
Do people want to pay for it? Because that's the problem you've got, isn't it? And that's when you start to get what people talk about a potential for a bubble, is when the earnings aren't quite keeping up with the market cap that's been put on them.
Yeah, and that's a very good question, Ryan, and this is sort of what is fueling some of the skepticism, some of the AI bubble discussion is there enough revenues and revenues being generated by the AI companies that can support the hundreds of billions of dollars of capex that's going in? So this year alone, we're talking about $600 billion of capex being spent on AI infrastructure. And when I mean infrastructure, I'm talking about AI data centers. So these are the huge buildings that are full of the super advanced computing chips called GPUs, which essentially run the LLM models. At the moment, in my estimates, we've probably got around about $50 to $70 billion of AI revenues coming. So OpenAI, which owns, as I said, owns ChatGPT, is probably making around about $15 to $20 billion of revenue at the moment. And you compare that to the $600 billion of capex alone this year, it's just not enough revenue.
No.
And if you roll forward what we think where capex could go in the next few years, we think it could be well over $1 trillion per year by 2028. And if you run the math sort of we do on that, how much AI revenue do you need to sort of support a good return on investment on that capex? It's probably about $2.5 trillion. Now we're at 50 to 70 odd billion today. But coming back to your question, do people want to pay? Well, there's signs of people wanting to pay. ChatGPT's got 800 million users at the moment, and if you compare that to other technology products, that's the fastest scaling user subscription you've ever seen.
Right.
But only around about, I think it's about 5% or so of those people are paying for it, are willing to sort of pay the monthly. And it's probably quite heavy on people that work in information type jobs, white collar workforces who are looking for information to help in their workplaces. So there's not quite the conversion rate you'd want to see to sort of justify the capex at this point.
The 2 trillion number that you're throwing out there is how realistic is it that we could get to that one day, that there will be a demand? And maybe it's not a demand from you or I wanting to search how to make a pancake, but businesses might buy the subscription so that we can use it for work, that kind of thing.
Yeah, exactly, and that's certainly what companies like OpenAI are targeting, both hit the consumer with a subscription, hit the businesses. I think in a short period, if we're sort of looking over the next 4 or 5 years, I'm highly skeptical we're going to get anywhere close to that number.
Really?
Even in OpenAI's own forecasts, they sort of get leaked periodically to the market. They're talking about doing 200 billion of revenue by the end of this decade. So nowhere near the 2.5 trillion I'm saying that you probably require.
So what does that mean for the current market valuations? What does that mean for this bubble?
Yeah,
inverted commas.
So it creates some level of skepticism, right? Ultimately, if the revenue is not going to be achieved, or the revenue that we think needs to be achieved to justify investment, then you will have a significant fallback in the prices of stocks that are linked to this. I mean, you can't go in and spend $1 trillion of capex and not get the revenue to support that. The reason you're still seeing the market generally move higher, or you're still seeing sort of strong prices in the AI-linked stocks, is people think they're sort of willing to give time for the technology to develop. If you go back through a lot of technology cycles in history, they tend to under-deliver in the short term. The technology is sort of not quite as good as people hoped it would have been, or as the speculators were sort of hyping it up to be in the short term, but they over-deliver in the long term. We go back and look at things like when the first computers were invented in the 1950s or 60s. Well, it wasn't really to the late sort of 1980s where everyone started getting personal computers, and it took 20 or 30 years for that technology to develop. Even if you look at some of the technology around like Microsoft Office and when Excel first came along, like it took a long time for this to sort of develop. And if AI follows that same pathway, it could be a situation that, we're spending a little bit heavily at the front end, but everyone's wanting to make sure they're going to be a leading market position. and over the next 10, 15, 20 years, you start to see AI grow into its own.
In the short term, if we have a correction, if there's to be a correction, some sort of bubble bursting, whatever, how could that bring the whole, the rest of the stock market down? How exposed is New Zealand to it?
Yep.
Milford's investing in AI. What's the exposure there?
Yeah, absolutely. If you saw the AI bubble pop, let's say, or let's say there is a bubble. We're not certain it's a bubble right yet. Hindsight will tell. But let's say there is a bubble, and it does sort of get to a point where you even get skeptical on AI working, and then the big companies go, "Oh, look, we've probably been spending a bit much. Let's pull back." I think that's going to be very negative for the stock market. By some measures, I think it was JP Morgan came out with a paper about a month ago where they looked over the last couple of years, 80% of earnings growth in the S&P 500 has been driven by AI-linked stocks. And this is a pretty broad term of AI-linked stocks. I mean, they basically got all the big mega-cap tech stocks, Google, Microsoft, Meta, Amazon, Nvidia, all linked to it. But it is showing you there's a real concentration of both earnings growth and by stock price performance in the AI stocks. So if AI doesn't work, then you're going to have a pretty material pullback. I'm not seeing it being like .com levels, I think in .com period, which was about year 2000. I think when that bubble popped, the Nasdaq fell over 75% or so. I don't think we're seeing that sort of level of hype in the market yet, and I don't think we'll see that pullback. If you compare today, the companies that are spending the most on AI, that's like your Microsoft, Amazons, Googles, Metas. They're incredibly profitable companies. They're trading at valuations that aren't that unreasonable. Yeah, they're a little bit expensive versus history, but they're quite reasonable. Whereas in the 2000 period, you had companies with no earnings that were spending a lot of money, leveraging to spend it all. They didn't generate much cash flow. So I think the fallout, as we sit today, would have been a lot worse in 2000 than what we'd likely see today.
So what is the investing strategy then? How do you, because as you say, you don't want to miss out on the potential long-term benefits, but also you don't want to get stung by investing in certain stocks maybe, or maybe it's too many eggs in one basket. Yep. That an AI stock that turns out actually that wasn't the one.
Yeah, good question. Firstly, it's diversification. Don't put all your eggs into one or two stocks, or so have a spread of the companies you're investing in. How we look at AI, we sort of put the companies in different buckets. So you've got the companies that benefit from CapEx. So the capital expenditure is what Microsoft, Amazon, Meta, these companies are spending, give or take 100 billion plus on capital expenditure a year. That money is going to a few places. The first and biggest beneficiary is the companies that are producing the computer chips. So we call them semiconductor companies. The biggest ones are Nvidia, which produces the leading GPU or AI chip at the moment. But there's other companies like Broadcom, AMD that produce competing chips. There's a company called Taiwan Semiconductor Manufacturing Facility, TSMC. That company actually manufactures all the chips for Nvidia. So Nvidia designs the chip, but they manufacture it. So that's an area at the moment while you're seeing AI spending going higher and higher, all the CEOs are saying they want to spend more. We said that area is still relatively attractive because they're getting the revenue today. We don't have to predict about AI revenues in 5 years. We're seeing it today because everyone's buying them. So, and at the moment, we're still seeing higher expectations of CapEx. So that area we can play. We don't want to be all in on that area because that area probably has the most downside risk to earnings if AI spending stops. So we need to be careful. So then what do? We diversify to some companies which we think are a bit more balanced. That could be longer term winners, not as exposed to that short term risk that like a Nvidia would be. So companies in that bucket include Microsoft, Google, Amazon. So these are the companies that are they have the AI clouds or the clouds. So when people want to use a GPU to train a model, to service what's called inferencing, provide the answers of models, they pay Microsoft or Amazon or Google to do this. And so these companies are sort of a good mix of sort of getting some AI benefit today because their revenues are growing quite fast as people use more GPUs. But they also have the potential to benefit longer term as sort of AI software comes up, gets developed and improves. So that's the second key area. And then thirdly, we diversify into companies that are getting benefits from AI. So companies that are lowering costs. So these companies you're starting to see are able to save call center costs. They're saving costs for AI coders that can, I would say, people are using developers, and they can use AI to save costs there. And so they're more of the longer term beneficiaries. So their share price hasn't raised as much today, but they could raise further over the next, or be the biggest beneficiaries over a 5 to 10 year period.
Fascinating. I knew you'd have all the good information. And because there's kind of this media frenzy, this is what we do in the media. We sort of freak out and we run a headline about a bubble and it does well, so we do 10 more.
Yeah, that's right.
And before you know it, it's like a self-fulfilling prophecy. But what is the last thing you used AI to search for?
Let me think. Top of my head. This is going to sound really geeky, but I've been searching about how custom accelerator chips are designed by Broadcom and how their contract works with Google. But yeah, I'll give you a more practical example. Running shoes. I'm training for a running race, and I used ChatGPT to compare the best off-road trail running shoes, and it provided a fantastic answer. It goes through all the specialist running forum websites and
better than you would get advice you'd get from a human in a store, do you reckon? Or on par?
Absolutely, yeah. I think it's a way better thing because it's going to all the specialist websites. And previously you used Google. You go to one specialist website, try find an article. This will go compare them all. But where I stop short is I then go to the Google website. Google to go to the actual underlying product website to buy it. What ChatGPT needs to do at some point is keep you there. So do the search and then get you to transact through the website, and they can take like a cut 100%. Of that transaction fee. So I think that's something which will sort of develop or come through over the next sort of couple of years.
They need to put you in charge. They have no problems with revenue. Andrew?
I did miss it. You asked about New Zealand before and how it impacts New Zealand. I forgot to answer that question.
Yeah, how exposed are we?
Look, we're in quite a good position because we're not actually spending all the money on CapEx. So it's all been spent by the big companies all over the world, like Microsoft, Amazon, etc. New Zealand's not really spending the money, but we benefit from it. So if all these AI tools come out, like we're just using examples we're giving of me using it personally, we're able to benefit from that without having to really pay much for it. Secondly, from a stock market perspective, our stock hasn't got too many AI stocks in it. So if you get an AI bubble sort of pop and pull back, would probably outperform. But an interesting area, I think, which is a little bit, it's not a great sign for sort of young people, is you are starting to see graduate levels of hiring go down because you're starting to see AI as being a way that it can sort of replace a little bit of what graduates do. Your lower skilled staff, the more repetitive or autonomous work. And so I think over the next sort of few years, it's going to be a little bit difficult for some grads coming out. Maybe there's not going to be as many jobs being hired from accounting firms like PwC or legal firms. So that's a little bit of a concern.
Yeah, interesting stuff. Andrew, good to see you as always. Thanks for coming on.
Thanks, Ryan. Appreciate it. Cheers.
That was Andrew Curtayne. He's a senior investment analyst at Milford, talking to us about the AI potential for an AI bubble and where to here for the stocks. You can like, follow, and subscribe this podcast wherever you like to listen. Thanks so much for doing so. Until next week, don't forget to invest in yourself.